Hi, everyone. My name is Jen, and on behalf of Copper State Credit Union, thank you for joining us this evening. So happy to have each of you here. I have a few items to review before we get started. Our session today is scheduled to last about 45 minutes. The recording of today's event will be sent out to you via email and will also be located on our website. Please take a moment to find your Zoom toolbar, likely at the bottom of your screen. We want everyone to be able to participate as much as possible during our session today, so we want everyone to be aware of the features available. Q&A. Please type your questions for the speaker here at any time throughout the session. You can click the anonymous button if you don't want your name attached to your question. If we need to send you any links during the session, you'll find these in chat. Finally, I want to point out the polling feature. You should see a poll popping up here momentarily. Please respond so that we know a little bit more about our audience today. Thank you. Now, I'm excited to introduce our speaker this evening, Christina Credit. Christina is Copper State Credit Union's Financial Wellness Program Manager. She's been with the credit union for 4 years and loves her current position. Christina has lived in the Valley for 9 years since moving from Pittsburgh. She loves listening to audiobooks and enjoys camping with family and friends, as well as working in her garden. A financial fun fact about Christina. Back in 2013, when she and her husband bought their house, their first house, they had no idea what they were doing. It's a good thing they had some trusted partners working with them. And she's definitely learned a lot since then. Christina, I'll turn it over to you.
Awesome. Well, thank you so much, Jen, for that introduction. Welcome, everybody. Happy to have you here this evening and very excited to talk about home buying. First, though, if you are new here, I want to make sure that you know who we are as Copper State Credit Union. I am coming to you this evening from Copper State Credit Union's Operations Center, and we are a local Arizona credit union that was built from the merger of two equally healthy and thriving credit unions, Canyon State Credit Union and Deer Valley Credit Union. That happened back in 2019, and then Southwest Healthcare Credit Union joined us in 2020. At that point, we rebranded as Copper State Credit Union, and our membership with its many benefits is open to most Arizona residents. So take a look at the counties up there on the screen. If you live, work, or worship in any of those counties, you are eligible for membership. We have 7 branch locations right now, plus a location at GCU on their college campus in the Lope Shop. We have over 40,000 members who trust us to do their banking, and we offer a variety of accounts and loans. We've got online banking, mobile app, pretty much anything that you would need. So one of the reasons we're here today is because of our core values. So who is Copper State Credit Union? We care a lot about these 4 core values that you see on the screen: family, empowerment, excitement, and discovery. You know, they aren't necessarily words that you would think of when you're talking about your finances, but in reality, making financial wellness and financial education easy, free, available to everyone as a benefit of membership, and even to the community who are not members with us. That's so important because it is key to the health of Arizona families going forward, and making sure that you have that knowledge leads to financial prosperity. And that means something different for everybody, but we want every single member of ours and community member to achieve that financial prosperity. And with that tends to come a lot of excitement and discovery of what you can make your money do for you. Now, as promised, we are going to talk about some ways to save and simplify when you buy a house. You know, when you think about buying a house, the first thing you probably think of is going to cost a ton of money. And the second thing is it's super complicated, right? And there are definitely, you know, there's some truth to that, but there are some really interesting ways to save and to simplify that process. So I want to share those with you this evening in the time we are spending together. So let's start with saving. And the first tip that I want to go over is to talk about increasing your credit score. Now, some of this you can absolutely do ahead of time. If you caught my session on Facebook Live with Russ, our VP of lending, he went real deep into credit score and what you can do to improve it and to grow it and keep it strong. But really, ahead of time, before you're going and buying that home, you can start to pay down your balances on your revolving credit, so credit card balances. For example, if you have a credit limit of $10,000 on all of your credit cards combined, we're talking like Lowe's, Macy's, all of the credit cards that you have. If you had $10,000, try to keep the balances under $1,500 that are like rolling over from a month to month basis, because this contributes to a section of your credit score called credit utilization. And that's about 30% of your score right there, is being able to not max out all the credit you have, and continue to make your payments on time for any loan that you do have, because that's another 35%. Just in those two things, 65% of your credit score. More about credit, check your credit report for errors. It's shocking to me, but 20%, 1 in 5 Americans have an error on their credit report. 5% of Americans had that error negatively affect their rate in borrowing money from a lender. So you could be one of those people that has an error, and if you get it corrected, you could actually get a better rate. It's a lot of times it's just one of the companies who send reports to the credit bureaus messed up, and you have the right to review that report and to submit when there are issues and get those resolved. Russ also shared with me, I'm stealing all of his information here, but he also shared that typically every 30 to 60 point bump you can increase your credit, you're probably going to get a better rate, a lower rate than before. So this is like the type of scale that lenders tend to use, is that 30 to 60 point range will give you a nice bump. The other thing that I want to mention is when you are in the home buying process, let's say you've gotten pre-approved and you're actively looking, avoid applying for any new loan or new credit line, because that, first of all, affects your score, and it can affect the process of actually buying once you're pre-approved. So these are some important things, and increasing your credit score can actually save you money because it can get you a lower rate as you bump that score higher and higher. So if you're thinking, oh, I'm not going to buy my house for a couple of years yet, you have this amazing opportunity right now to get yourself into prime credit score range to get the lowest rate available at the time. All right, next one here, avoid private mortgage insurance. Now, I want to clarify, private mortgage insurance is different than homeowners insurance. Please make sure you have homeowners insurance. That's going to protect you from things like fire. But PMI, private mortgage insurance, protects the lender in situations where there's not very much of a down payment. Houses are huge purchases, right? At least in Arizona right now, I know it's absolutely crazy. And, you know, it's not unheard of for someone to be spending $300,000, $400,000, $500,000 on a home or more. That is a huge loan. And those loans are a big risk to the lenders. So the private mortgage insurance is kind of a rule that all lenders have, that you're going to have to pay that if you don't have a 20% down payment when you're buying a home. So here's how you can avoid it. Have the 20% down. Of course, that's easier said than done because, you know, with a huge mortgage, like that's $50,000 or $60,000. That's a lot of money. But if you can't get all the way there to that 20%, that's okay. You can always drop the private mortgage insurance, contact your lender and have it removed when you reach that 20% point. And when I say 20% equity, what I mean is the amount that you own that you've paid off so far, or the value has gone up. If you get to that point where you own 20% essentially of the home, that's when you're able to drop that PMI or that mortgage insurance. If you have a conventional loan, if you have an FHA loan, you'll have to refinance in order to drop that mortgage insurance. Now we'll talk about, I have a really nice tool to share with you in a little bit here about the types of mortgages. So don't get hung up on that yet, but just know that if you can avoid private mortgage insurance, if you have that 20% down, you want to make that happen. Because it can be like 0.5 to 1% of the loan amount on a yearly basis. So we're not talking like $5 a month here. This is like quite a bit of money. So that's another way to save. Next up, get multiple quotes from lenders. So different lenders will give you different rates and they have different fees. Take a look when you go to get pre-approved, you're ready to buy a house and you're getting a pre-approval, which is a very good idea, by the way, especially if you're buying a house in Arizona. You want to have that pre-approval ready to go so that when you actually find the house, you can immediately start that process instead of having to wait and go back and get approved after the fact. So, yeah, different lenders will have different numbers. And when you get that pre-approval, put them side by side, get 2 or 3 and see what the difference is in the fees, in those closing costs. See if you can negotiate any of them. Just make sure to do all of those hard inquiries, those pre-approvals within a 30-day limit. So that it doesn't negatively affect your credit. That's another thing that can affect your credit is if you are doing a ton of different credit inquiries over and over and over again, that's a concern of like, well, why are you looking for so much credit? So the rule is you can do multiple of the same type of inquiry, like a pre-approval, just do it within that 30-day mark. Pre-approvals are typically going to be good for about 90 days, like 3 months. You'll just have to provide a pay stub and bank account information to get that pre-approval so that the lender can verify those down payment funds and that you have the employment to back it up. Next way to save. Please make sure you are typing in questions as we go here. I would love to hear from you guys. That is always a fun part of doing this, is getting questions from you. You can type that via the Zoom toolbar in the Q&A, and I will definitely get to those. This next one is interesting. So buying along the outer borders of a popular neighborhood instead of buying in a popular neighborhood. So think, if you're someone who's looking for a house right now, think about the dream place that you want to live, right? Think about the name of that city or town or whatever it is. Now, if you are able to live with just being on the border of that area, couple nice things can happen. You won't be paying the premium for a house inside that, amazing area, but you'll be close enough to enjoy some of the benefits. So maybe you really like that area because of the parks, or because of all the restaurants, or the shopping, or the schools, or whatever it is. You're close enough that you could probably still take advantage of some of those, but you aren't paying like the absolute premium for being in that neighborhood. And I mean, if you want to be in that neighborhood, more power to you. Just as if you want to save a little bit, that's one way. The other thing that's cool about it is there's a chance, like I can't say this for sure, but there's a good chance that the property you buy is likely to increase in value because of that proximity, right? So it's in a nice area. It may end up increasing in value because of that. So I like that one. That's another fun one. This one, probably not as fun. Buy a less expensive home. Well, obviously that's a way to save money. But I want to take a moment here to talk about, just because you're approved for $600,000 mortgage does not mean that you should buy a $600,000 house, right? So it's really more about you and your budget and your situation, and that should determine how much house you buy, right? You're the only one that knows you and your situation the best. The people who are doing the pre-approvals are going to give you all the information and what you qualify for on paper, but you're going to know your own financial situation best. So one way to do it is to take what you have as a down payment and multiply that by 5. Why would you do that? Well, because that would be the house you could buy and still put 20% down, right? Now, of course, that may not be a realistic number. If you're buying a $500,000 house, that's $100,000 for a down payment. So it may not be realistic to have that saved up. But if it's not, wait a year, save up some more. Get to that point where, you have that money saved. Or get as close as you can and know, okay, I'm going to have that PMI, but you know what? I'm going to try to drop it once I get to that point. So those were a few ways to save when buying a house. And now I want to move on to simplifying. Buying a house, as we said at the beginning, is not the simplest process, but we do have a few ideas to help you along the way. First, use a recommended local real estate agent. Yes, it has costs associated with it, but finding an agent, specifically a buyer's agent, okay? Don't go with the seller's agent, right? There's 2 real estate agents in any home buying transaction. The seller has an agent. The buyer also needs an agent. And you don't want, as the buyer, to be using the seller's agent because they have the seller's best interest in mind, right? So you want your own, you want your own person. And know that typically the seller is going to be the one paying the buyer's agent commission in the contract. Now, of course, every contract is different, but yes, it's going to be a little bit of a cost, but man, a buyer's agent can negotiate items for you to save you money that you never would have known about. They can give you really good advice on making an offer, what to put in as, a contingency, or what to make sure you leave out, whether to bid a little bit low or bid a little bit high. And that kind of information changes on a regular basis. So it's not like, even if I spent all of my time to become an expert in the real estate market tomorrow, all of that information could change in a week or two. So it's their job to know all of that. And it can be really helpful when looking and when going through the buying process to have a recommended local real estate agent. So that's definitely going to make your life a little bit easier, for sure. Next one on simplify is to understand the types of mortgage loans to find the best fit for you. So I'm going to take us here to, oh, no, it was that one. Okay. This is our mortgage comparison tool. And I'm going to make it a little bigger to make sure you guys can see the whole thing. And I'm going to ask Jen if you wouldn't mind sending over the URL for this mortgage comparison tool. It's on our website, but Jen will go ahead and send the link to you in chat in case you want to check it out later. This tool is really nice because it gives you the mortgage types here on the left-hand side. It gives you a definition. It gives you pros and cons for each mortgage type, and it says who it's best for. Honestly, I like this part the most because I just go to the best for and see if I fit that description, right? That's an easy way to start by narrowing down, what I'm looking for. But I do want to note here that the conventional mortgage, that's the super traditional one. And these next two, fixed rate and adjustable rate, I want to note that these are types of conventional mortgages. So they're two different options. You can see that here in the title: fixed rate conventional, adjustable rate conventional. So reading through these, we're not going to go through all of it right this second because it's a ton of information, but hold on to that link. If you don't know what type of mortgage loan you need, this is something you definitely want to read through because it gives you the top most popular, most used mortgages and tells you who they're good for. All right. Let's get back to what we were talking about. Understanding the types of mortgage loans. If you go into the process knowing what type of mortgage loan you're going to need, that's going to simplify things for you. You're going to know what you need ahead of time, the type of down payment, the type of lender. It's just going to make everything a lot easier. And this is a really fun one, buying or purchasing a home in the off season. So you guys probably, like me, live in Arizona. I guess I'm making that assumption. I guess there could be people out of state, but for those of us in Arizona, we actually have very different buying times that are considered prime or the best time to buy. They're different than everywhere else. So in basically the rest of the United States, it's cheaper to buy a home in winter. Kind of obviously, who wants to be moving their entire house or apartment or whatever stuff in the dead of winter when there's 6 inches of snow on the ground? I'm from Pittsburgh. I know that I would not be signing up for that. So, but it's really funny because in Arizona, everybody wants to move in winter because we certainly don't want to be moving when it's 120 degrees outside. So May, the month of May in Arizona, is going to save you about 6% on the purchase price. And that was as of 2019 to 2020. So of course that may not be the case going forward, but isn't that an incredible difference, that you can actually save money on a house if you're buying in May? So that is, May can be pretty hot. Maybe people just don't want to be moving in May because they assume it's going to be very hot and summery already. I don't know. But other things that kind of make it simpler for you buying in the off season: less crowded, right? Less traffic. Moving companies and trucks can be cheaper in the off season, like May, June, July, August. It's definitely cheaper. I don't know if any of you've like noticed this, but it's definitely cheaper to rent a hotel in the summer. You know, if you're moving, sometimes you need a night or two in between like your two places. And if you need to stay in a hotel, it's going to be cheaper to do in the summer or in the Arizona off season. I just thought that was so funny and unique that we tend to be different than the rest of the United States in that. So this is the point where I'm going to actually walk you guys through a case study. These guys you see here, David and Julita, they are going through this home buying process. And I'm going to walk you through what their timelines were, what process they had to go through, the steps. And that's how we're going to spend the rest of our time today, talking about kind of the process of buying a home. So before that, I'm just curious, I'm going to send over another poll to you guys. Go ahead and take a moment to fill out the poll if you can. Wait about 30 seconds. See those results coming in. Thank you. So it looks like for those of you that responded, you are looking to buy a house within the next year, and you are first-time home buyers. So very cool. That's interesting to know that. Thanks for sharing. Polls are anonymous, by the way. I guess I should have said that first. Okay, so David and Julita. These guys currently live in an apartment in Phoenix. They want to buy a house in Glendale. Reason being, they want to be close to her parents. There's a good school district, and they've done a lot of research over the past year or so to figure out the neighborhood they want to be in. And they've been saving up a down payment for several years. They've gotten to the point where they have $15,000 saved for a down payment. Plus, they were gifted some inheritance money of about $25,000. So with that, they're getting ready to go out and buy their first house. So here's what is going to happen for them. First, they are finding a realtor. And this is, again, going to be a buyer's agent, someone who's local, recommended, trustworthy. Luckily, Julita's parents have a realtor they've been using for buying and selling investment properties for years. They trust her, and they begin that relationship by sharing like, hey, this is what we're looking for in Glendale, this many bedrooms, this many bathrooms, and setting up that relationship, making sure the realtor's available, and getting like that first appointment on the books. So that process for them takes about 1 week to find that realtor. Of course, it's going to be different for everybody. They already knew someone. It was like a family friend. So that makes it a little bit easier than it would have been otherwise. So for other people, it might take a little bit longer to find that really good realtor. Next up, they're going to find a lender and get pre-approved. So remember, within a 30-day period, you can get multiple pre-approvals, and you can put those loan estimates side by side and compare them. In order to get that pre-approval, they had to provide 2 months worth of bank statements to verify they had funds for the down payment. I know it sounds weird, like handing over your bank statements, but the lender needs to know, oh, they actually have $40,000 to put down on this house. They also had to provide 1 month of pay stubs that verified their employment, knowing, okay, these guys have jobs, they're going to be able to pay for a mortgage going forward. So they compared with a few different lenders and they decided to go with their local credit union. They actually had the same rate. They were quoted the same rate from like a bigger bank and from their local credit union, but they decided to go with the credit union because the fees were lower. And that is something that you will notice about credit unions will tend to have lower and less fees than banks, just because of our nature of being like a not-for-profit organization. So they were approved, David and Julita were approved for a loan amount up to just about $400,000. So it was $395,000. That was their pre-approval. They're good to go. It took 2 weeks to get those pre-approvals from several different lenders, provide all the documentation needed. So it took a couple of weeks to get that taken care of. So that is their step 2. Next, and I would venture to say that this might be the most important step, is they have to sit down and crunch the numbers. They use a mortgage calculator and try to come up with what they feel comfortable with when it comes to paying for their mortgage. By the way, Jen, if you want to send this over in the chat, a link to mortgage calculator, that would be great in case anyone wants to use it. And I'm gonna, again, I have to kind of expand this. Give me one moment. So they put in some numbers here. They know what they ended up with was deciding they were comfortable with a $300,000 home. The down payment, they actually moved that to about $33,000. Now they have $40,000, but they want to have that some cash available for closing costs to pay some of those up front. So making sure that they have that available as well. So you can see it actually tells you the percentage. So they don't have that 20%. They have 11, right? They're going to go with a 30-year term, and then we'll just say that they qualified for 3.6%. You can also factor in here, because it's important to know, like a lot of mortgage calculators are going to have your home price. You're going to be paying on your principal and your interest, but you also have to keep in mind taxes and insurance as well as PMI. So that's going to affect your monthly payment as well. And this one just kind of pre-populates some averages for PMI. You know, that's that private mortgage insurance we talked about earlier, taxes and insurance. But they said, okay, we want to stick to around $1,600 for our monthly payment. We don't really want to go over that. So they did that work on their own, right? And notice that loan amount, sorry, it's being difficult. They are not going to go above 300,000 because they know what they can afford. They know what they feel comfortable with. And, you know, when they put in 400,000, they saw, wow, that's a decent amount less that we'll have down. And, you know, we're going to probably have the same interest rate. And that monthly payment goes up to over $2,000 a month. And they said, we don't want to pay that. Like, we don't have the room in our budget right now to be paying $2,100 a month, approximately. Of course, none of these are going to be exact. These are just estimates. But they don't want that. They know what they're able to afford. So they work with these numbers and come up with the best thing for them. So that's a really, really important step. And I hope you guys don't skip on that, right? Like it's really important. And if you're to the point where you're like, well, I don't really know how much I can afford on a mortgage, you may want to take a step back and take a look at some of our budgeting resources. And if you go to the resource center on our website, you will find a ton of budgeting. We have an ebook, we have a webinar, we've got a lot. We have an actual budget template that you can download and edit. So please check those out. If you're not sure what you can afford for a mortgage payment, you probably want to start with a budget first. So yeah, that's what they ended up with. They said, okay, we won't go above 300,000 because with everything else factored in, that's the monthly payment we want to stick with. And notice it's nowhere near the amount they were pre-qualified for from the lender. Number 4, David and Jolita, they start browsing and attending open houses. This takes them about 6 weeks that they're browsing around. Everybody's going to be different. Keep in mind your pre-approval. Once you get the pre-approval, you want to start looking right away because those are good for about 90 days. Of course, if it expires, you just, apply for it again. But yeah, they want to be actively looking for houses because they just got that pre-approval done. So they're doing open houses. A lot of open houses are virtual now, I'm hearing, which it just feels crazy to me. But yeah, so they start actively looking and they find a house. So super exciting. They find a house and it fits pretty well what they wanted. It's a 3-bedroom, 2-bath, nice little backyard. But they didn't get the corner lot they wanted. They really wanted a corner lot. They wanted a den, and they also wanted to have a nicely landscaped yard, but it didn't have those things. But you know what? Nothing's perfect. And the way things are in Phoenix right now, there's not a ton of houses available. So they decided that it was worth it. The seller is asking $295,000. But their realtor suggests that they offer $305,000 because of the competitiveness of the market at the time they're looking. This is another reason why you always want to have a trusted realtor to help you, because it could be the difference between getting the house or not getting it. And as I said, this type of advice is going to change pretty rapidly. So they make an offer. Then the seller responds to the purchase agreement. So they can accept, counter, or decline. A decline could be somebody offered them a cash offer, which is a very easy way to, get rid of your house, not have to go through the lending process. But yeah, that could be they got a better offer. But if they counter, that means that there's certain items in the agreement that they want to change before moving forward. And you can discuss these items. They're called contingencies. Discuss them with your agent, see what you're willing to live with. But theirs was accepted in our little case study here. So that means that they move on to the good faith deposit. So this is called a good faith deposit or earnest money, which I think is a really funny term, but it's accurate. Definitely shows that you are serious because you're putting down about 1%. So on their $305,000 home, it's just over $3,000 that they're putting down, and this is considered the first chunk of their down payment. At that point, they are going to be seeing more communications from the lender with disclosures for them to review. There'll be another itemization of the closing costs. This is where you have to provide a ton of documentation. 2 years of tax returns, another month of pay stubs, 2 years of W-2s, 2 more months of bank statements, and anything on there that looks weird or different, requires more documentation. So compiling all of this and having the lending team process their mortgage takes about 4 weeks. And just a reminder, closing costs are separate than your down payment, right? So you have to account for that as well. In the meantime, while that kind of processing is going through, they're getting the appraisal and the inspection on the property. The appraisal establishes all the value, whereas the inspection looks at the condition. So both of them are necessary. Inspection, if something came back like termites or mold or something that was like a deal breaker, there is time when you can back out of the sale. And that's another like contingency that goes in. Like if something's seriously wrong, you're still able to back out. But that's another reason why it's helpful to have a realtor, because they know what contingencies to ask for. But their appraisal came in at around 290, which is close enough to the purchase price. It can be an issue if the appraisal comes back very differently than the purchase price, but in this case, it's fine. The inspection revealed like some little issues, but nothing that was really a deal breaker for them. So then they get their homeowners insurance set up. They go with their current carrier for auto so that everything's in the same place and it's easy, but you don't have to do that. You can go with whatever you want. And while they're taking care of the homeowners insurance, the mortgage lender is working with a title company to do title search, title insurance. And once these are done, the closing can be scheduled. Right before the closing, they do a final walkthrough. And then they meet and they are able to sign all of the documents to close on their home loan for purchasing a house. It's definitely, you have to sign your name like 500 times, I swear. It's quite a bit. And they have to have the down payment funds there at the time of closing. So sometimes they have to send a wire transfer. Occasionally they can do a paper check, but when they meet with the title company, they've got to have their ID and all that good stuff. So there it is. That is David and Jolita's journey buying a house and kind of how that went for them. And we've talked about a lot today. I hope that it was helpful for you if you are someone who's going to be buying a house shortly or in the market to be starting to look. I do want to check, and I'll pause here in a moment. I'm going to check and see if you guys have any questions for me on anything we talked about today. But do make sure that you take the survey on the exit page. It'll also be emailed to you. Take the survey, let us know how we did today on Save and Simplify when you buy a house. And make sure when you do that survey, you'll receive your free ebook, How to Buy a House in Arizona. It has super detailed information about a lot of the stuff we've talked about today. And you see our contact information there. So please go ahead and check that out. Jen will also send the link to the survey in the chat. I don't see any questions at the moment, but go ahead and feel free to send those over if you have any. And I just thank you guys so much for being here this evening and for joining us. And I wish you the best of luck in your home search.